morning and welcome to the brand new edition of the newspaper show right here on ET Now. I'm Cheryl D'Souza and I'll take you through the top stories that's there on the Economic Times as well as the Times of India. So let's get going with the top headlines that's there on the Economic Times this morning. First up, you have the RIL AGM, big headlines coming out from that front. You have Google to buy 7.7% in Jio. For about, if you see, the cost is about 33,700 crore rupees. Reliance Industries announces homegrown 5G solutions. You have Infosys Q1 profit beats estimates, rises about 12%. The real interest rate is now in the negative zone. Talking about trade data and the trade balance surplus after 18 years. You have Amazon order. They've got they've told the sellers to get the origin tag. Apple wins fight against $15 billion EU tax order. Moderna begins final human trials this month. Chinese companies Delhi-Mumbai eway bid gets rejected. Sachin pilot indulged in horse trading. That's the word coming in from Ashok Gehlot. And those are the top 10 headlines coming this morning from the Economic Times for you. But let's shift focus to what are the top market headlines that's there in the newspaper. First up, Infosys poised for better show in FY21 versus peers. Remember, Infosys came out with their Q1 earnings yesterday. Tata consumer shares doubled during the lockdown. You have Bandhan Bank that reported their Q1 earnings. The net profit has fallen 32% due to the spike in provision. Wall Street declines amid tech rotation. SEBI warns corporate bonds to trade on SE platforms. Those are the market headlines. Moving on to now the corporate headlines that we have this morning for you. Jio TV Plus eyes big disruption in OTT space. Reliance Industries unveiled that particular product in their AGM yesterday. Zydus vaccine in adaptive human trials. Embassy and Indiabulls real estate to merge assets. Maruti Toyota recall 3 models for faulty pumps. And lastly, auto companies get nod to keep factories running. All right, and those are the top headlines that's there on the Economic Times for you this morning. But let's shift focus to the big headline coming in from the Reliance Industries AGM. And here it is the top story on the Economic Times as well. And that is Google to pick up 7.7% stake in Jio platform for 33,700 crore rupees. To talk more on that and what this exactly comprises of, I'm joined by my colleague Ajay Sharma. Ajay, good morning. Take it away.
Well, it was quite a very educative, speech by Mukesh Ambani for shareholders, which were longing to hear from him what will be the roadmap of growth be for the company from here on. For Jio, clearly there was quite a few announcements coming in, global partnerships, especially the Google partnership, which has been announced today. Not only a strategic, but even financial partnership, 7.7% stake, will also make low-cost Android phones. There's almost a equal, if not bigger, market at the lower end of the pyramid as far as smartphone usage is concerned, and they're not being able to graduate to more expensive phones, so they're going to make a dedicated offering. Apart from that, global partnerships are being spoken about in the retail business, which is already set to completely disrupt the grocery model in India, like an omni-channel model, digital versus physical. And global partnerships and investors will be lined up, which he said, watch out for the space. Next few months, announcements could be made. And moreover, the delay in Aramco deal, he completely acknowledged the point that the deal is being, has been hung because of some global issues, and they will be spinning out the company into a separate company, and other global investors are quite interested in investing. So it actually ticked all the boxes very well. There was some amount of profit taking which set into the stock price. Well, it has rallied more than double in the last 2.5 months. Some sell-on news perhaps will actually happen. But there was a lot of guidance being given one clear focus was to make Jio Platforms a global technology company because of the partnership which is being forged. That was another key takeaway from 43rd AGM of Reliance Industries today.
All right, Ajay, thank you for taking us through that particular story and through the AGM and what was announced in that Reliance Industries AGM. But let me now shift focus and let me go on to page 10 of Economic Times and talk about this story here, and that is Amazon. Amazon has ordered Get Origin tag to the source. Amazon has asked sellers to display country of origin in all their listings by August 10th. Also, the move is being viewed as a part of India's strategy to curb foreign imports, specifically from China. The seller on Amazon India will have to disclose the country of origin of new and existing products listing by April 10th. That is the word coming in an email from Amazon to their sellers. The retailer has also warned sellers that their listings could be suspended if they fail to comply. That is what Economic Times has picked up. They've had a look at the copy of that email that Amazon has sent to the sellers. Also, the decision preempts any government move to set a deadline for sellers as well as e-commerce marketplaces to comply with the country of origin rule. The government currently is negotiating with e-commerce companies to ensure that all products listed on their applications and websites carry the country of origin tag as part of India's strategy to curb foreign imports, especially from China. So there you go. Amazon has gone ahead and written an email to their sellers saying that please do mention country of origin tag by August 10th, and if they don't do so, their listings could be suspended if they've not complied with this particular rule. All right, then let's shift focus now to some earnings, and Bandhan Bank came out with their Q1 earnings yesterday. And how was the performance? Varun is standing by to take us through the analysis of Bandhan Bank's Q1.
Positive surprise for us yesterday when we got the results of both Bandhan and Federal Bank. Now let me tell you why. What have we heard about banks in Q1? We've heard that credit growth is supposed to slow. We've heard that NPAs are supposed to rise. It's going to be impossible to tell you what asset quality figures are because moratorium hasn't lifted yet. We've heard that interest income will come down. None of this happened for Bandhan or for Federal. Interest income was up for both of them. Credit growth was up for both of them. Deposits were up for both of them. Advances were up for both of them. Sequentially, YOY, however you want to look at it, there's definitely been an improvement in all operating parameters. Now, the only glitch, as we all would expect, is that obviously they've taken higher provisions. In the case of Federal, they've taken a 186 crore COVID provision, which some might say is less than necessary. In the case of Bandhan, they've taken a 750 crore provision. Now, in the case of Bandhan, if you look at the way the collection efficiency is picking up, they might not need to take such heavy provisions in Q2 or Q3 onwards. So really the signs are very positive. In the case of Federal, they're being more cautious. They're still providing and they're not giving commentary stating that provisions might taper off. It all depends on the performance of the assets going forward. Both banks have found their niches. Bandhan in the MFI credit has found strong response from borrowers who are willing to take credit and they are willing to lend, and they're paying back as well. Let me remind you, payments are not coming from deposits for Bandhan Bank. They're coming from fresh income made from business operations by the borrowers. So in the case of Federal, segments of growth were the retail segment, obviously, and then the gold loan segment also did very well. On the operating level, both operating profits saw some improvement. Federal looks like it declined on a sequential basis, the operating profit, but that's not the case because there was some one-off gains last quarter, which made the figure look higher. So both your banks coming in with a really positive result. That being said, everyone's monitoring the asset quality closely, and we all know that till the moratorium is lifted, we're not going to know the real NPA picture. So cautious investors will wait for that. Some more bullish investors who are more hopeful of a recovery might definitely take this Q1 result, which was supposed to be the weakest result for banks, as a strong buying cue to once again begin entering the financials.
Thank you for taking us through the detailed analysis of Bandhan Bank's Q1 earnings. Let's shift focus now to ET Markets page, and here you go. This is the story my colleague Jayesh will be joining in to talk about, and that is SEBI wants corporate bonds to trade, I beg your pardon, to trade on exchange platforms like stocks and GSECs do. So what is the story all about? What SEBI is asking? My colleague Jayesh is standing by to take us through that particular detail. Jayesh, interesting piece of information coming in on Economic Times. Take us through the details of that.
That's right. What SEBI is actually looking to do is create a platform wherein the corporate bonds will also trade on, the exchange, which is similar to how the stocks and GSECs actually trade currently as well. Now, let me just tell you that, NSE and BSE already have these platforms, but these are merely for reporting the corporate bond deals. For the time being, how corporate bond trades actually happen in India is actually over the phone. There is no order matching or processing system that is actually put in place. So they are actually, looking to build such a system which will do the automatic processing of the orders. And it will also, streamline the process and bring in greater transparency and liquidity to the corporate bond market as well. The primary reason that I'm actually gathering for this particular move to be expedited is the Franklin fiasco, which happened a couple of months ago, and that has in fact triggered the urgency to come up with more lasting solution for the crisis in the corporate bonds. So, what SEBI wants is a model which is on the lines of the NDS Home platform, which is currently run by the CCI, which is Clearing Corporation of India, on the behalf of RBI. So they want a similar platform to NDS Home, which will enable corporate bonds to actually be traded similar to stocks and GSECs that currently we have on the exchange.
All right, Jayesh, thank you for taking us through that particular story. Let's shift focus now to page 4 of Economic Times. And here you go. This is the story that we're going to talk about. And that is of Embassy and Indiabulls Real Estate. They are going to merge assets. So which assets are these and what are they talking about? I have my colleague Vivek joining us. But before that, I will take you through the details of that particular story. It's there on page 4 of Economic Times. The deal will see Indiabulls exiting their realty business. So realty developers Embassy Group as well as Indiabulls Real Estate will merge their real estate assets under a deal that will see Indiabulls Group exit the realty business all in all. The definitive agreement for the merger is expected to be placed before the listed companies' boards by August 15th. Indiabulls Real Estate said in a filing on Wednesday, yesterday, they let the stock exchanges know that they are planning to go ahead and place the definitive agreement of merger before the board on August 15th, by August 15th, I beg your pardon. Also, as per the plan, Embassy's 62 million square feet of real estate assets will be merged with 31 million square feet of assets that is under development. Also, after the merger, Indiabulls promoter Ashok Gehlot will hold less than 10% in the combined company, where Embassy Group chairman Jitendra Virwani and his family will own about 30% and institutional investors around 35%. This is as per sources to Economic Times. So let's see how Indiabulls Real Estate, Embassy all react and trade on this particular piece of information that Embassy and Indiabulls Real Estate to merge their assets, and deal will see Indiabulls exiting the realty business. Let's shift focus now to Infosys. They announced their Q1 earnings yesterday post-market hours, and also they gave their FY21 guidance. So what were the numbers like and what are they guiding for in FY21? My colleague Poonam is standing by with the analysis. Poonam?
While Infosys results as a beat on most counts, but most importantly, the management has resumed the annual guidance. Also, for FY21, management has guided for revenue growth of 0 to 2% in constant currency terms. Operating margin is seen in the range of 21 to 23% for FY21. It's a beat on margins as well as profitability, with dollar revenue growth coming in largely in line. In terms of constant currency, revenue degrew by 2% quarter on quarter. We were working with a degrowth of 3.8% odd. The total dollar revenue was 3121 million. down 2.4%. EBIT margin was up 150 bips quarter on quarter at 22.7%, and the management did state that strategic cost levers as well as rupee depreciation did help the EBIT margin. Digital revenues came in at grew by nearly around 25% YOY in CC terms. Now digital revenues form nearly around 45% of total revenues. Large deal wins stood at $1.74 billion, and also management said that they have won nearly around 5 deals in the BFSI space. In terms of the verticals, we're seeing that the financial services vertical, which forms nearly around 30% of the revenues, grew by 2.1%, and high tech also performed very well. Management stated that their confidence and visibility for the rest of the year is improving, driven by Q1 performance and large deal wins.
All right, thank you, Poonam, for taking us through Infosys Q1 earnings. Remember, the ADR, Infosys ADR saw a huge bump in trading in Wall Street, overnight trading in Wall Street. So let's see how the stock performs today. Yesterday saw Wipro also surge in trade. Let's focus now on to page 9 of Economic Times, and that is talking about the trade data and the trade surplus. So basically, trade balance surplus after 18 years, impact for imports. Fall is worrying. Exports had fallen by about 12.41% and imports were down about 47.59%. So India registered a trade surplus in June, the first in almost 2 decades, as imports plummeted, raising concerns over the health of the domestic economy. India's exports contracted for the 4th consecutive month, shrank about 12.41% in the month of June, while imports fell about 47.6%, yielding a surplus of $790 million. That was the data showed in when it was released yesterday. Last time when we saw a trade surplus was in January 2002. So yes, this is what the data is showing. The non-gold, non-oil imports, an indicator of domestic demand strength, shrank about 42.2%. 26 of the 30 major also still stretched. So this is what the entire picture when it comes to the trade data looks like. Trade surplus for us after 20 years, but a huge dip coming in for the imports as well. All right, let's shift focus to another story that's there on page 9 of Economic Times, and that says the Chinese companies Delhi-Mumbai eway bid gets rejected. Officials cite security concerns. Government will now offer contracts to second lowest bidders. Remember, this is in a bid to not have Chinese companies into Indian projects. India has rejected bids of 2 Chinese companies that emerged as lowest bidders for developing 2 stretches of upcoming Delhi-Mumbai expressway. Security concerns. The board will not award these projects, entailing a cost of about 800 crore rupees each, to subsidiaries of Jazzy Construction Engineering Corporation. Government official told Economic Times. They've said they've denied letter of award to these Chinese companies. Also, that security clearance issue is at present. So that is one of the reasons why these companies' bids have been rejected for Delhi-Mumbai eway. All right, and that's all that we have on this edition of